Thank you, everyone, for joining us today. I'm Tara Bradley with the Growth State. I'm very excited to have Jeremy Harbour with me today. He is a Singapore-based serial entrepreneur, founder and owner of many companies. He's a global leader in the field of small business M&A. Through that, he's been the CEO and founder of the Unity Group PE firm, which focuses in that small business niche. He's also the founder of the Harbour Club, which is a community for that same group. He's the co-creator of the agglomeration model, which I'm hoping he'll talk to us a little bit about today. And then most recently, the thing that I got most excited about is an author of a book called Go Do Deals. I haven't got a chance to read it yet, but I read an article that talked about it. And it's just one of the things that I get excited about when you're getting into this space, because people don't understand the importance of just having that focus. So Jeremy, thank you so much for being with us today. I'm excited to have you.
Thank you so much for inviting me. I really appreciate it.
Yeah, for sure. So I'm going to start with a question that I kind of start with everyone. With your experience, you probably have a number of these to share, but I'd love to know, I find people that are, especially if they're pretty successful in the area they're already in, they don't go and decide to be an author because it's going to make them, rich. It's because they want to share something and they've had an experience they want to share. And it's usually around a pain point, like, hey, that was painful for me. I want to share my experiences. I'm wondering if you can tell us a little bit about that and maybe something that's been profound in your journey that set you on the path to really support this small business M&A niche that you're in.
Yeah, I mean, look, it's really interesting. You talk about a niche or a sector of small business, and it kind of is a sector, even though it's, every industry is encompassed in that sector. But I think what a lot of people don't realize is how important to the economy our small businesses really are. In the US, for example, 50% of your GDP comes from small businesses, and over 90% of the private sector workforce. So if you don't work for the government and you don't work in a big company, you work in a small business, and that's 90% of the private sector workforce. It's enormous. It is the economy. It's where everybody's working. It's in every community, in every town, every city across the whole of the United States. And yet they really get the short straw, if they want to borrow money from the banks, they have to bet their house. There's tons of private equity money, tons of VC money swimming around in the universe. None of it goes into those small local businesses. It all goes into derivative investment products that are created by banks, or it goes into, tech startups or big established companies. And I just saw this as being a massive, massive problem. I mean, if you think about it, we should have a meritocratic link to wealth. If you work hard and you're successful, you should be financially rewarded for that. And unfortunately, those two economies have been getting further and further apart. You've got an economy over here that's got all the money in it, and then you've got an economy over here with all the people in it. And Wall Street never meets Main Street when it comes to capital allocation. And that really got me. And I've always run businesses, I've always grown businesses, and it got me that when I looked at my investment portfolio, I wasn't exposed. Personally, as a wealthy person, I wasn't exposed to small business. And I figured that had to change. And it needed to change in a couple of different ways. One of them is creating a product that people can invest in, so making small business an investable asset class. And the other one is small businesses leveling up and creating real shareholder value so that they are attractive and that they create great businesses. And the book you mentioned, Go Do Deals, really came out of that, because there are so many books on how to get started, how to do marketing, how to do sales, how to do leadership. There's no books that say, now what? You've got I've started a business, I know how to get a customer, now what? And that was really my why.
Yeah, that's fantastic. When I first got into this space, I didn't kind of grow up in that entrepreneurial space. I was in corporate America, and I remember my first kind of jump into that space. My very first COO, he's like, we've always got to be doing deals. We've always got to know when the next one's coming, whether we're buying them or we're going out into looking for our next partner. And it was something that resonated with me, because I think of all the deals that got really close to and then kind of fell apart, but we've been able to go back and leverage those relationships, and it's all kind of this own big ecosystem. So I'm really excited to hear more on your perspective on going to do deals and your model. So from your perspective, you work with a lot of those small to medium-sized businesses, you know, and I think one of the things that you highlighted is they have to go, you know, mortgage their home. They have to go find the funds. So many small businesses that start out, you know, they even if it's a SaaS-based company, they'll a lot of times try to bootstrap and just, you know, plug it out and get through it. From your perspective, how do they know when they can go out and get, you know, alternative sources of funding, or they're in a position where they can, you know, or even have the resources to go and find those deals that make sense for them?
Yeah, so this is a really good point, because I think this is why many small business owners dismiss M&A, because they assume you've got to have all this capital. They kind of think, well, that's not for me because, you know, that's later on. My education was fascinating because I had a telecoms company that I'd grown in a bootstrapped fashion, and you know, just like you say, kind of, I always described it as robbing Peter but not always paying Paul. You know, you're kind of slowly scrabbling around for the cash,
like
trying to do
Peter
stuff.
And his brother.
And I found this little mobile phone company down the road. It was a 13-year-old business. It had about 1,000 active customers, which is about what we would connect in a year doing normal, you know, sales and marketing sort of activity. And the guy was desperate. He wanted to sell, and he wanted £15,000 for that business. You know, it's about $20,000. So not a huge amount of money to get this database of customers that we could make a lot of money from. But at the time, I had two choices: pay my staff or pay my credit cards. You know, I didn't have this third choice, which was give this guy £15,000 for his business. And so, as they say, necessity is the mother of invention. I just kind of tried a million different ways to do it without putting any cash up front. And eventually it worked. And we managed to acquire this company without any cash up front, paying in the money over a period of time. And we grew by a year's worth of sales in an afternoon. Now, that wasn't a very sophisticated structure. And since then, we've developed the ideas and come up with much cleverer ways of doing it. But the main point remains the same. It's how do you grow through acquisition without putting cash in up front, without having institutional you know, banks or institutional lenders coming into the picture. And it's about creating a deal structure that works for both parties, but doesn't require you to have lots of capital. And that's the key in the book. In Go Do Deals, I talk about how you find those opportunities, how you structure the deals, how you finance them, because you don't need money to finance them. You need clever structures to finance them, and then what you do with them once you've got them. And that was a key lesson for me, because yeah, we grew by a year's worth of sales in an afternoon, and I suddenly realized you don't have to run the marathon. You can just run the last 10 yards. They still give you the medal at the end, you know?
Right. Yeah. What's your perspective? I love that. And I love the idea that, you know, I think so many people that are in that position, they look too late, right? They wait too long to try to go and find those resources. And one of the things that I think is really, that really holds them back is they think they have to be profitable, right? They think they have to be, you know, creating, you know, beyond cash flow break even. What's your perspective on profitability and going out and approaching those different options that they have to build their business?
Yeah, so look, I would try and acquire as early as possible, because often, you know, I believe you can solve pretty much every problem in a business through an acquisition. So if you're looking to attract really good talent, they're probably working in another company. If you want more revenue, you can get that from buying another company. If you need a different product or service or access to a different type of market or a particular customer, you know, I think you give me I'm an M&A guy, so I'm a bit of a broken record, but you give me any problem and I can probably solve it with a deal. There's a company out there that would fix that. And so, yeah, getting to profitability quicker, getting more revenue, getting, you know, utilizing your capacity more can be achieved that bit quicker, that bit easier with a strategic sort of acquisition into your, you know, into your company.
Yeah, and that brings up a really good point. You talked about a strategic acquisition, and I think particularly founder CEOs that haven't done it before, they're scaling themselves. They sometimes miss opportunities to say, hey, I can fix this problem through acquisition, and they don't need a ton of capital to go do it a lot of times. How do you kind of get people's mind around that? Because they're like, hey, man, I'm not even profitable. I'm not sure what I'm doing.
You kind of have to let them, you have to let them peek behind the curtain. you can't, it's almost like another dimension of thinking. If you're thinking in a particular way, to think over here is really, really hard. But once you've been shown over here, it makes so much sense. I mean, I remember that first deal I told you about. You know, I was driving this little van with all the contents of this mobile phone business literally in the back of the van, driving back to my office, and the hairs on the back of my neck standing up, you know, just the hit, the adrenaline rush I was getting from it, because it was kind of like I'd just shattered this paradigm that I'd held true for my entire life. I believed you had to start a business, work really hard, sales, marketing, you know, constant reinvention of your marketing program. And here I just found like a 13-year hack where we picked up a 13-year established business in an afternoon. And you know, it was such a game changer because it sent my mind off on all these different directions. Interestingly, 2 weeks later, we bought our second company, because it was kind of like, once you'd figured it out, there's opportunity everywhere. And a lot of the people that I have I have a community called the Harbour Club. A lot of my people in the Harbour Club community say that they're missing deals every day because they're so obsessed with what they're trying to sell. So they will meet up with somebody, they'll have a whole meeting with that person, and all the time they're thinking about selling their product to them. And I can relate to this because when I had my mobile phone business, I would have met people thinking, how many phones do they use? How much do they spend on their airtime? As soon as I realized I wanted to do deals, every conversation I had was about doing deals. It was about, I'm looking to acquire companies, I'm looking to grow by acquisition. And that just completely changes the type of conversation you have. So it's kind of like if you're looking for deals, you're going to find deals. If you're looking for new business, you're going to find new business. But guess what? People looking for new business are really irritating. People looking for deals are actually quite interesting. So you have quite a lot of interesting conversations.
Do you think it's there's a factor? I love that, by the way, because you get a completely different mindset. Yeah. And I think sometimes when you get through deals, you realize you're a deal person, right? Like I said, I came from corporate America, got involved in several deals, and I'm like, you know, and then people will call and say, hey, I want you to come and work for my company, and you know, it's public, and it's like, well, are you doing M&A? No, we're not. I'm like, well, that's what I do. I'm not interested in not being in that deal environment. I'm curious from your perspective, you mentioned that a lot of times companies are missing out on deals because they're so focused on their product. Do you think that's a bigger issue with a founder CEO than it is from a place CEO who says, hey, we got to do deals?
Yeah, absolutely. Because look, small business owners, you can't be successful in small business unless you're obsessive about what it is that you do. And that obsessiveness creates that one track focus. And so, you know, consequently, everything else kind of has to get dismissed in order for them to have the single-mindedness to take the things forward. So, you know, what we're often saying to people is, hey, look, just have a look at this and put some of your attention into this area, because you'll be blown away by what you can achieve in a relatively, you know, short space of time. I mean, look, we built a group of companies up through a sort of a roll-up strategy, which is this agglomeration thing I touched on earlier. You know, we grew to 100 million in revenue from zero in the first 12 months. And, you know, I just don't know how you can do that with an organic strategy. You know, it only makes sense in an M&A environment. And yeah, it's a very quick way to scale a company. If I go back to that telecoms company, which was back in the 1990s, I had that, I sold it in 2006. But in that telecoms company, I was doing about $1 million of revenue, which had taken several years to get up to. And we went to 13.5 million of revenue in 18 months. So we went, you know, we more than 10x'd it in 18 months as soon as we added M&A as one of the, you know, as the second engine on the plane, if you like.
Right. That is great. Tell us a little more about the agglomeration model and what that entails and how someone kind of conceptually gets their mind around it.
Yeah, so look, it started out as this idea that there isn't really an investable asset class for small business, you know. So if I looked at my own personal portfolio, I was in bonds and stocks and real estate and derivatives and, you know, cryptos and metals and commodities and things like this, but I had zero exposure to small business. So we basically said, why is that? And it comes down to three key reasons. Small businesses are risky. They lack scale, so you know, you kind of have to be big to get big. and they're illiquid as investments. You put your money in, it's stuck there for a really, really long time. So we figured if we could solve those three problems, if we could create scale, liquidity, and a manageable risk profile, we could attract investors into the small business market, which would have the impact of kind of democratizing wealth. It would bring money from all those hot, sandy countries where it's swirled away and bring it into real communities where people are living and working and doing stuff. It's that Wall Street to Main Street thing I alluded to at the beginning. But the practicalities of doing that were really interesting. So what we wanted to do was create effectively a governance structure that allowed these businesses to continue to run relatively autonomously while being part of a fully reporting public company. So effectively, an agglomeration is really a publicly listed holding company with a number of subsidiaries who all continue to operate their business, the way they always have. It's actually not too dissimilar to what Berkshire Hathaway do with the businesses that it acquired back in the good old days. It would take on these family firms that have been established for a really long time and then stay out of their way and let them carry on running the business how they saw fit. Well, the difference between this and the Berkshire Hathaway model is in this model, those business owners get a piece of the action. So they're also shareholders in the big picture, whereas Berkshire Hathaway would buy people out and own them completely. So the agglomeration that we listed is called MBH Corporation PLC. It was listed 2 years ago, pretty much to the date we're doing this recording, actually. Last year, it was the third fastest growing small cap company in the whole of Europe. There's 20 companies have now joined the group. The average age of a company in the group is about 20 years. And these are in real economy businesses. So construction services, education companies, there's transportation companies, leisure businesses. There's businesses with real people in real towns and cities doing real things. So.
That's great. Having worked with small businesses and being in that niche, I'm sure that you find a lot of leadership teams that you either have to upgrade the person in the seat or, upgrade the role entirely into a different type of leadership team. How, from your perspective, how important is that for the founder CEO? We're leading the company, and sometimes it's them, right? And then how important is that for you as an investor and somebody who's, walking them through that to be in charge of that process and get their mind there to make sure, is that something that you kind of evaluate before you bring them into the group or kind of as you're working with them?
Yeah, so in an agglomeration, it's actually the other way around. It starts with the competent management and then the company kind of comes second. So the people that we have in MBH Corporation are leaders in their field. They've often written books on the topic. They're often supplying the largest companies in their sector. We have a company in New Zealand that has Google as a customer. We have, Harrods department store in London, Louis Vuitton and Tom Ford and people like this as clients. There's one of the ladies running Acacia, Vicky Sylvester, won the Entrepreneur of the Year award last year for the EY awards. So we really attract leaders in their field and people that are really, really good at stuff. But we kind of have two layers. One layer is what we call our strategic acquisitions, which are those ones with those great leadership teams that really know how to do stuff. And remember, these businesses are often, the average age is 23 years. So they've been through a couple of economic cycles. They've been around the block. They know what they're doing. And then we also have what we classify as tactical acquisitions. Now, they're more like that mobile phone business that I bought, where you're just trying to add a year's worth of revenue in an afternoon. And there, the management is probably less important because you're bringing them under the wing of one of those, very competent, existing. Yeah, we kind of have opportunities for both those kinds of businesses. The team is so critical. We're really proud of the people that this model attracts because, the finance world is so short term, but entrepreneurs are long term. They're all about creating value, legacy, something to be proud of. And the finance industry is all about, well, if I can sell it for $1 tomorrow, screw everybody, I'm going to take the money, And so trying to keep them out of the picture and keep more of the entrepreneurial spirit in there. And we do that a lot through the structure that we offer to the companies onboarding to make it less appealing for the get-rich-quick guys. So it's kind of a get-rich-slow program. but it creates a lot of shareholder value for everybody.
Sure. What do you think is the most important factor, when you're looking at a deal? What are you looking at in terms of evaluating how they can scale? If they haven't done anything or they've not really thought it through, and it's clearly something that they're going to need to do to make it an attractive investment for you. What do they have to focus on to really become that scalable, attractive company that you're looking for?
Yeah, so we have the fortunate position that small businesses that have been well established, they have no issues with taking on more customers. When you're a startup, you're always fighting to figure out how you're going to fund more customers or how you're going to grow at a certain pace. When you're a well-established, profitable, well-run business, that's not normally the challenge. And there's two key ways that companies that are doing an agglomeration will tend to scale. One of them is by being part of our group, by being part of a global multinational company. You can punch above your weight, so you can pitch for bigger contracts. I talked about the scale paradox earlier. You have to be big to get big. Contracts when you're already big. So being part of the group means that they can now tender for those larger contracts and win them. So, we've got loads of examples of companies that have gone out and won contracts almost as big as they are. So we had a company in New Zealand that does 25 million a year in revenue. It won a 25 million contract. Well, that's pretty unheard of in procurement terms because normally you wouldn't get past the first post on that. So so the scale paradox is one big area where we can help them grow, and the other one, of course, is M&A. When you're part of a global public company, you're more credible. You're more credible when you approach your competitors to acquire them. And as I've said already, my solution to everything is go buy a business. So we will help any of those participants grow by acquisition and help them structure the deal, help them put the deal together and get that business into their business to help them scale more quickly.
I think that's definitely it's definitely interesting when you get into that aspect and you start to understand that the path to scale is sometimes getting bigger, and you get bigger first and then figure out all the systems for that. I'd love to have your perspective on if we have a leader or a founder CEO they're kind of in the space where they're starting to grow. They're somewhat scalable, and they are looking for a deal. How do they prepare for diligence? How do they get themselves in a defensible position? And what's the most important thing to make sure you've got locked down so you can get through that process?
Well, so look, during a due diligence process, you can adjust the deal to make it fit with the new information that you now have. The key thing really is getting in front of targets, so getting those conversations started. And what's really tempting for most people is to try and focus on, business brokers or intermediaries or corporate finance companies. And, my advice generally is don't surround yourself by advisors. The challenge is that most of the books on M&A have been written by advisors. So of course, turkeys don't vote for Christmas. Advisors are going to say, get loads of advice. And so people often start with this idea that you've got to have a deal team, that you've got to have these advisors on board, and then you've got to start screening companies that are for sale. And actually, I would say the opposite of that. You want to deliberately avoid the companies that are for sale and just start having conversations with companies that fit your target profile. Because, oftentimes you'll find that people, or you'll find a very high percentage of people would be for sale if the right deal was there, or haven't considered it but might consider it, or are thinking about how they would transition but haven't yet got around to thinking about how. So you can kind of, there's a bit of luck involved, but you can deliberately put yourself in luck's way, and you'll be surprised how many. What a high percentage of conversations with, effectively completely cold companies can actually turn into a conversation that could be something interesting, whether it's a joint venture, an equity stake. Lots of our delegates take sweat equity stakes in companies for solving problems for them or fixing things. And those opportunities come out just because they're out there talking to business owners. So I would say the first thing to think about is being in front of your target audience on a regular basis and finding where the opportunities lie within that community, and then pivoting those conversations to how you work together, whether that's an outright purchase or partial purchase or a merger or whatever it could be.
Right. Yeah. And so from your perspective, and I think this resonates with what you've already talked about, is you just get out there and say, hey, I'm ready, or I'm ready to at least have a conversation to talk about the idea of it. And then through those conversations, say, well, I have a gap, but I don't have to necessarily fill it. I can fill it with this other, option that I hadn't thought about.
Well, you'll be amazed as well when you start having those conversations. You'll come across two different companies that suddenly realize, hey, there was a really good synergy with them. They supply that client. These guys have this thing. If I put them together, that could be really interesting. So, you just the opportunities that present themselves. And like I say, when you go to networking meetings or you do whatever, talking about deals, you're way more interesting than the person that's just trying to sell whatever the hell it is they're selling. So it's
exactly. Yeah, for sure. You talked about selling a little bit, and I think we're always selling when we go into those conversations. I think we probably share a similar perspective in that I truly believe you buy the team first. That team has to have a compelling reason why they would be a good partner for you and open to some ideas. What's your perspective on the pitch when you go up to somebody and you're saying, hey, we want to get in the game, we want to have good conversations? How do you make sure that very first conversation is really valuable?
Yeah, so I think a really important thing is to obviously drill in. Well, spend time on rapport. Really get to know and understand them and what drives them and what they're looking for in life. Try and understand what the needs are, and most of the needs they'll be quite happy to tell you. The one that they don't tend to share is legacy. I think they feel it's too egocentric to say, I want my name to stay on the front of this building after I'm gone, but maybe that's what they really want. So with legacy, it's worth bringing up ideas around legacy and see what the physiology from that is, whether they react positively to it or what. So coming up with legacy, digging into the ideas, and then coming up with a solution. I actually think presenting them with a rough solution there and then, actually presenting a deal structure there and then, is hugely powerful, because I think too many people go away and then just send a contract when everything's kind of cooled down and calmed down. And I think, I love that expression, deals are like concrete. The longer you leave them, the harder they get. If you actually have enough information to flesh out what a proposal could look like, try fleshing it out there and then, and seeing if it's if it's getting the right sort of feel from them, if you're getting the right response from them, and if it is, then of course you progress on to other areas. But I think it's hugely valuable to try and position an idea while you've got them the first time.
Right. And I love that, because so many people don't do that, right? They are like, well, let's let them value us. Let's let them come to the table with something. And if you can start with that and say, hey, I'd love a deal to be structured like that, I think people have to remember it doesn't have to be perfect. It doesn't even have to be close sometimes. It's just a way to start a conversation to say, well, you're not getting that, but we could talk about this. And so I think
it's also a really interesting sort of pattern interrupter, because they're so used to meetings going a particular way that when somebody does it in a different way, it's a little bit of like, oh, hang on a minute, I've got to think about this now. It's like, right. I'm not just going to shake hands and say goodbye. I've got to actually engage here. It's,
Right, which I love, because so many of your traditional PEs and VCs, they're formula thinkers, right? Like there's a number, there's a formula, and I love that. You disrupt that and you start to have different kinds of conversations, and people get more excited, and you're more likely to get a deal done. So I think that's great. We are running up on time. I could probably sit and talk to you all day.
We'll have to do round two someday, huh?
Yes, that's true. That's true. Anything else that you'd like to share with us that I didn't ask, but you think that the group would be interested in?
Yeah, I think you covered some good points there. And look, it was one of the reasons why I wrote the book, Go Do Deals. It kind of takes people through the concept of this, the background to this idea, and why I think it's a valuable thing for business owners to think about, how they can actually then practically go out and do some of these things. How do you find these companies? How do you speak to them? What deals could you present to them on the hoof, like I just discussed? What do you do when you've caught one? What does the dog do when it catches the car? And then some things around as well. So I think, the idea was to try and give people a flavor, because I think once you start to learn about this stuff, it's mind-blowing what can be achieved.
Yes, definitely. Well, I want to let all of the people watching know we've got Obviously, a bio page with Jeremy's information. He is not hard to find. He's got a ton of information out in his social, lots of articles and just good resources. Definitely go check out Go Do Deals. Like I said, I just read the article and I'm excited to get the book and read the rest of it. And if you want to reach out and see if you've got an opportunity Jeremy's interested in, that he won't be hard to find for sure. So thank you so much, Jeremy. I appreciate your time today, and we will get this wrapped up.
Fantastic. Thank you.